Welcome to Commerce Talks. Today we are going to discuss paper 14 of CMA, that is Strategic Financial Management, and the first section, that is Investment Decision. Let us continue with the session, and in today's class we are going to discuss about measuring cash flows, discounted cash flow techniques for project evaluation, estimation of cash flow. For each and every project, we have to predict what is the income from that project. Cash flow simply means inflow or outflow of money. So we have to estimate two aspects, that is cost as well as its benefits received over a period of time. So in financial analysis, we are estimating cost and benefits over a period of time by investing in long-term projects. And also we are estimating the cost. It is very easy for ascertaining the cost for the current period, but the future is always uncertain. It will be very difficult for us to predict what will be the cost on a future date. So that is the first concept. We have to estimate the project's cash flow. Now there are two approaches available in order to ascertain these cash benefits, that is cash inflow as well as accounting profit. We will be always preferring cash inflow approach. It is considered as a superior approach over the accounting profit approach because it measures actual benefits from the investments. That is why cash inflow approach is considered as a superior technique. Whereas accounting profit approach, it is less reliable because it is considering various non-cash items such as depreciation. Now we are moving on to the next topic, that is different types of cash flow. It can be categorized into three: initial cash flow, subsequent cash flow, and terminal cash flow. Initial cash flow. It simply means it is an investment outflow. It includes all the types of asset cost, installation charges, transportation cost, and incidental charges related to that. Then sunk cost. Sunk cost simply means already incurred cost. So we are just ignoring in the case of initial cost. Okay, sunk cost will be always ignored. And one more thing is that tax on gain on sale of an asset. It will be added and tax on loss on sale has to be subtracted from the initial cash flow. Investment decision related to replacement of an asset, it considers salvage value. Salvage value or scrap value is the value which is received at the end of the useful life of a particular asset. Whatever amount received from the sale of a asset's useful life, that is known as salvage value. So that amount will be considered as a cash inflow and it will be subtracted from the cash outflow related to the installation of new asset. And also whatever income we are receiving, gain on sale of asset, it will be added and loss will be deducted from the initial cash flow. Finally, we will be considering changes in working capital position. If there is any requirement for additional working capital, it also increases our initial cash flow. So working capital also affects our project's cash flow. So this is a simple rule. From the cost of a particular asset, we will be adding working capital. If there is a requirement, we will be adding. If there is a decline in the working capital requirement, we will be deducting that. Salvage value will be deducted. Tax savings for loss on asset is deducted and tax payable for profit on sale will be added. So this is a method to find out what is the initial cash flow. Okay, from the total cost, additional working capital will be added, salvage will be deducted. If it is profit, tax payable will be added. If it is loss, it will be deducted. So that is the first concept, initial cash flow. Now we are moving on to the second concept, that is subsequent cash flow. Initial cash flow occurs only at the initial period, but whatever cash flows occur on a later period, that is known as subsequent cash flows. It is also known as operating cash flow, and here we are estimating cash inflows after tax, and we will be adding the depreciation and will be deducting interest. So this is a method to compute the net cash flow after taxes. So from the total sales revenue, we will be deducting the cost, all the expenses and depreciation. So we will be arriving at profit before interest and tax. From that we have to deduct taxes. After that we will be receiving profit after tax. Then again we will add back the depreciation. So we will get cash inflows after tax. Okay, we can analyze here. From the net sales, we are deducting cost, operating expense as well as depreciation. So we will be arriving at the earnings before interest and tax. From that we will be deducting the interest. As said earlier, interest will be deducted. Tax also will be deducted. So we will be arriving at profit after tax. Net cash inflow after tax. From that, that is earnings before interest and tax. From that we have to deduct taxes. After that the depreciation will be added back. So we will be arriving at net cash inflow after tax. So this is the simple rule, profit after tax. From that, first of all depreciation is added and interest is added. From that, tax on interest is deducted. So we will be arriving at net cash inflow after tax. So this is a very simple format. Just go through the format. And the last concept, that is the terminal cash flow. Terminal cash flows generally occurs at the end of the asset's life or project's termination. It includes all the values such as salvage or scrap, release of working capital, tax implications, etc. So the method to find out the terminal cash flow, that is from the salvage value you have to add tax savings on loss, less tax burden on gain on sale of asset, add release of working capital. So in today's session, we have discussed how to estimate a project's cash flow, financial analysis as well as cost estimation, then approaches in that cash inflow approach as well as accounting profit approach. Next, different types of cash flow. There are three types of cash flow: initial, subsequent and terminal cash flow. If you are having any doubts regarding commerce related subjects, kindly mail to us, and also for the handwritten notes or the PDF, mail to us. Don't forget to subscribe our channel. Thank you.